Okay, so we are going to do chapter 28, which is manufacturing account. I already explained briefly what is manufacturing account in the last class, but let's recap and have a look at the example. If you have the book in front of you, that will be much more convenient to understand. Okay, so if you have a book Deepnath right now with you, open it up and follow along. Okay, so manufacturing account, I explained you earlier, it is a way or it is an account where you can calculate the cost of production. So if you are manufacturing anything, for example a calculator, you will need the buttons for the battery, the screen, the maybe if you are having the solar panel in it, maybe the solar panel, the plastic cover. So you need to have many things. So all these things you are buying from different suppliers. So when you are buying these things from different supplier, what happen is you need to identify the cost. How much does it cost for you to make one calculator, right? Because you are buying things in maybe stock a lot, so you need to calculate the cost for each product. So what terms you need to know? Cost, direct cost. First of all, we have direct cost, which means that the cost should be variable. The cost should attribute to single unit. That means how much how much plastic, how much buttons, how much screen, how much batteries you are using in one calculator, you can know that. But things like machine you are using to make the maybe combine the components and fix the calculator, you can't know. Okay, because that is not directly attributed to single unit. But you know how many buttons you are using in one calculator, maybe 1 2 3 4 5 6 7 8 9 and 0 and answer and equal, maybe 20 buttons in one calculator. So you know you are using 20 buttons in one calculator. That is called direct cost. And for one calculator you are using one plastic casing, you are using one screen and one battery. So you know directly, or you know that one single unit is using this much of goods. Okay, indirect cost, you cannot identify how much it is contributing to one unit. For example, your machine. Okay, maybe you have a machine to fix all these components and make a calculator. So you take all the components, you take the button, you take the frame of the calculator, you take the screen and you take the battery. Okay, and you put it inside the machine and it will make a calculator for you, it will fix everything for you. So you don't know how much that machine is producing. But if you can see that in one day, every day, or maybe every day it is making 500 units, then it will be direct cost. Okay, but if you don't know how many units it is producing, but it is helping you to produce that unit. Okay, so one the one thing you need to know is it is helping you to make the goods. Okay, and the second is not directly. Okay, so it is firstly it have to help you with the goods cost, what is there, and then it's not directly. In this one it is helping you and it is directly. Prime cost is the total direct cost. So you can have couple of direct costs. You can have direct material, you can have direct labor, you can have under direct material you can have many materials. For example, I told you you can have buttons, you can have the plastic casing, you can have screen, you can have cell, the battery. So you can have many direct material, but for you only one will be given. Okay, so don't worry about it, but I'm just saying that there can be more than one direct cost and direct labor can be more than that. Okay, so prime cost, total direct cost is called prime cost, and total indirect cost is called factory overheads. Okay, work in progress are just unfinished goods, you haven't finished them. So yeah, that's all I guess. Now this is almost like, you can say, income statement. Why is that? Because you have to include the items here for the year. For example, if you have cost here, direct wages, let's say, or and maybe repair or rent, any example, okay, it should be for the year, so it shouldn't matter whether you have paid them or not. Okay, you remember the last chapter, a subscription account, right? Clubs and society. So under that, it does not matter whether you have paid or not, you should have the amount for the year. So if that rent is for 2016, it should be for 2016. You cannot, for example, this is 2014, so this rent is for 2014, does not matter you paid or not. The rent, the expense in 2014 for rent is this much. Okay, the concept of accruals is applied in manufacturing account. Format also looks a bit similar to income statement, but it is not. First you have opening inventory. Now this opening inventory is for raw material, not finished goods, raw material. That means if you are making a calculator, what are the raw materials? The casing, the battery, the buttons, the screen, all those are raw material. Opening inventory mean how much, when you opened the shop today, how much was left from yesterday, left over from yesterday. So closing inventory of 2013, or you can say this is 30 September, right? So maybe the last month. Okay, so opening inventory, then you have purchase of, again, raw material, not finished goods, raw material. Closing inventory again of raw material. Plus minus, you will get your raw material cost. Then you will have direct cost, add it up, you will get this. Why add it up, right? Why? Because it's an expense and this is the material cost. Remember what we are calculating here, we are calculating cost, we are calculating how much does it cost to make the product. So we take all the expenses and add them, we take all the expenses and add them. Okay, so we add this and this and we get the prime cost. After that we take all the indirect expenses that helped us to make the product. Okay, electricity, for example, the rent of the building, the repair. Now this repair should be for machinery you are using to make the product. Okay, this insurance should be the insurance for the machinery or the product, or it should be helping you in some way to make the product. Okay, depreciation should be for the machinery. Now if the rent is for the office, or if the repair is for maybe your sales department, then these things are not going to be here, these things are going to be in income statement. Okay, also same for insurance. If the insurance is for office staff or anything that is not related with that is not helping you to make the product, it's not going to be here, it's going to be in income statement. So here you add up all the indirect expenses, total them up, and then add with the prime cost. Now this cost and this cost, you will get cost of production. Now you have two new things here, opening work in progress and closing work in progress. Opening, closing work in progress should be added, and closing work in progress should be minus. Why is that? Work in progress, I told you, are the goods that are not finished. First let's have a look at this. Now when you haven't finished these goods, you cannot include them here, and you cannot include them in balance sheet, in income statement, sorry. Okay, so what you should do is have a separate account for them, not account but a separate section where you can classify that these goods are halfway done, these goods are halfway done but not fully done. Okay, not fully done, halfway done. So if you were let's say you were making a calculator, but then it was time to go back home, so you left the calculator like that and you went back home. So that is called work in progress. But when you came tomorrow to continue that, that will be opening work in progress. I know this amount is same, it is not supposed to be same, okay, I mean it can be different, because this is from last year, what you left last year and you brought forward this year. This one is closing, okay, this one is closing. That means how much you left this year when you were going to close the accounts, so you will get the cost. Now this is the cost of production, how much it actually costed you to make calculator, okay, maybe 1000 calculators. Then you will have sales as normal, let's say XX. Then you will have opening inventory. Now this opening inventory and this opening inventory again are different. This is for raw material and this opening inventory is for finished goods, okay. Then you have purchase or cost of production. Cost of production is going to be this, so this is going to be XX and this amount is going to be equal to this. Now you can have purchase, there are few circumstances where company maybe machinery is not working and you want more products, you want more items, so you will purchase the finished goods so you can sell them at higher price. So you can have different section for this. For example, you can have purchase also and you can have cost of production also, but it is not necessary you have this in all questions, okay, it is not necessary. This one is just an exception. Sometimes if you're not having enough stock, let's say you ask me 5 calculators but I'm only having 2 calculators, so I will buy 3 calculators from someone else and give it to you, because I want to make my sales, because you asked 5. I don't want to say to you that I don't have 5 calculators, you know what I mean, right? So here I will write 3 calculators and here I will write 2, because 2 are the only calculators that I made throughout the year, okay. So this is going to be excess. Let's say this is closing inventory, so it means this is going to be minus, plus plus plus, this one is minus. You will get the cost of goods sold here. Now this sales minus this, you will get gross profit. Normally these expenses again are not related to cost of production. These expenses are from office, from sales department, from others department, HR department, you know, other departments, all the other departments. So for example, admin expense, you will have admin expense, office expense, sales expense, depreciation. Now this depreciation should be the one, not this one, not this depreciation. This depreciation is for machinery that help you to make the product. This depreciation did not help you. These are other expenses, okay. So total them up, you will get total expenses, then gross profit minus expenses, you will get your profit. This minus this, just like other income statement. Now in balance sheet also you will have one thing that is different, and the thing that is different is this. You will have balance sheet, normally your non-current asset will be normal, current asset, under current asset you will have inventory, right? Usually you will have closing inventory here, which indicate this. So this closing inventory will be in balance sheet usually, okay. But now we have this one, normally we will have this, and now also we have this, but we have 2 additional items, okay. Maybe I can change the colors. 2 additional items, these are the 2 additional items. So raw inventory of raw material, so again this is finished closing inventory, okay. So that means not this one, but this one closing inventory, because these are my assets, right? I haven't sold them yet, so I will have this in my balance sheet, and this my closing work in progress. Maybe I can write it over here, closing work in progress. W is for work, I is for in, and P is for progress. Okay, now you are going to have 3 closing inventories in manufacturing account. Then trade receivable will be normal, cash or bank will be normal, then you will get your total assets. Trade liability is also going to be normal, loan also normal, then you will have opening capital, add profit, minus drawings, and minus you will get your closing capital. This plus this minus this, you will get your closing capital. So take this and add your two liabilities, you will get equal to total assets and total liabilities. Okay, now you need to do question 7 and question 8 and MCQs. Question 7 right now, and question 8 and MCQs you can do by Sunday, until Sunday, and on Sunday we will have physical class and everything's going to be fine, I guess. So for example, go on question 7, page 307. So the first thing you are supposed to do, they have given you the trial balance, right? Now the first thing you are supposed to do is take the trial balance and identify which item will go in which financial position, a financial statement. Okay, for example, whether it's going to go in balance sheet, whether it's going to go in income statement or manufacturing account. For example, the first one is admin expense, so we know admin expense will go in income statement, so you write I with it on beside. I mean, so it's easier for you when you are making income statement and when you are making manufacturing account. You can take all the I items and put in income statement, take all the M items and put in manufacturing account. For example, first one is administration expense, which will go in income statement. Cash at bank will go in balance sheet. Capital, balance sheet. Direct wages will go in manufacturing account in this section. Drawings, balance sheet. General expense, now we don't have general expense here. General mean general, I mean it is not related to anything. Now here we have only expenses that are related to whatever we are making, but here we have all other expenses. So general expense are going to be in income statement. Indirect wages and salaries, manufacturing account. Inventory, now for inventory, see we have 3 inventories here. Opening inventory for raw material, this one. Opening inventory is given. Opening inventory for this one, raw material. Opening for work in progress is given. Opening, where is it, this opening inventory for finished goods is given. So these 3 will go in different section. Now why closing is not given? Because closing is not in trial balance. In additional information they should have given you. Yes, they have given you. You see, in additional information, if you see, they have given you closing inventories there. So after inventory you have machinery at net book value. Which one will go in balance sheet? Office equipment, balance sheet. Office salaries, income statement. Purchases of raw material, okay, raw material. So not purchase, this one purchase, but this one raw material. So this one will go in manufacturing account. Revenue will also go in manufacturing account, trade payable, balance sheet, trade receivable, balance sheet. So make manufacturing account from this income statement and balance sheet. Question 8 is also same, but in question 8 you have to figure out on your own which one will go where. Okay, so that's all. If you have any question, text me and I will help you out. Okay.